Hi there, welcome back to the last unit of our Research on Corporate Transparency course. In this unit we're going to talk about non-financial reporting. So non-financial reporting is a very current topic and also a very important topic, and so the idea of this unit is not to, let's say, present the research on non-financial reporting in its entirety. I think this is not feasible. Instead, what I want to do is I want to give you a little bit of structure, building, of course, on prior literature in that field and also some survey articles that I will talk about, and then maybe motivate you to think about this field a little bit more broadly than maybe some of the current accounting literature does. So anyhow, I thought that it might be a good idea to start with institutions and some terminology. This is going to be a relatively quick video, and if you are a diehard non-financial reporting expert, then there is not that much that you can learn from it. I apologize. But for the others, so the first thing that I want to discuss is, well, what is non-financial reporting actually? And this is a term that has been coined over the last years to, I think, compromise or to include all disclosure formats that are not traditional financial reporting. So it's a little bit of a letdown in terms of a definition, but I think this is the easiest way to understand that term. So we know what financial reporting is. This has been regulated under generally accepted accounting principles around the world, and most firms are required to provide some disclosures related to their financial statements and everything that goes with it. But then there is also alternative information that firms provide voluntarily or because they are regulated to do so. So the most prominent thing that you can think of maybe is sustainability reporting. So reporting about how firms develop their business model in being sustainable and what actually is the result of these activities. So this idea has become prominent in the last decades, I can say, and now with the European Union requiring large public firms and public interest entities to provide regularly CSR reports, this has also become, let's say, a more regulated affair. So it is a little bit of a term that is hard to pin down precisely, because there are also other related disclosures that firms can make and sometimes are even required to make that would classify as non-financial reporting. So here I have some examples, but there are many more. For example, in certain industries, firms are required to make disclosures related to their work safety, right? Or maybe from a human resource perspective, they have to make regulated disclosures about affirmative action activities, the diversity of their workforce. All these aspects are regulated disclosures. They are non-financial in nature, so they would qualify as non-financial reporting, and they're interesting to study. So when it comes to lobbying here, in many jurisdictions, firms have to disclose their lobbying activities. This doesn't only apply to firms, also to other subjects, but again, it is a component of disclosure that is non-financial in nature, and as thus would be classified as non-financial reporting. So you see, it's really broad. One thing that is a little bit confusing maybe when you start to look into this literature, that there is a overlapping and varying terminology to characterize let's say, the main bulk of non-financial reporting information. And I think these three terms, to me, they are almost synonymous. But if you go into the regulations in these fields, then of course there are some differentiations. So I think historically, firms have, the term has also been labeled ESG a lot. So ESG reporting compromises environmental, social, and governance issues, right? So the idea is to provide information about these important aspects. And then the term CSR reporting has been coined. CSR reporting, corporate social responsibility reporting, has a little bit more of a normative ring to it. So because it is also some idea of how firms, let's say, should behave. And they should behave responsible in a social way, right? So this is why this term maybe has a little bit of a descriptive notion, but in principle, I think you can use, these terms are almost used interchangeably in the literature. And then there is sustainability reporting, which of course is related again. Most people would say that sustainability reporting has a little bit of an ecological feel to it. So it's a little bit more closely related to the ecological problems of firms' behavior. But of course, sustainability also involves social aspects. So I don't want to get into a debate about how these things can be separated or how could they be combined or structured. I think in total, all these terms relate to a certain set of disclosures that firms either make voluntarily. For example, in the US, most of this would be voluntarily, or in the EU, it would be required. And as you maybe know, there are also current debates about extending this level of requirement to even more firms across Europe. So CSR reporting is here, and it is here to stay. Okay, so now what is the next thing that I want to talk about very briefly? I'm going to talk about all these players. So don't get this wrong. So the non-financial reporting playground sounds a little bit toyish. It's not been meant this way. But I think it's important to understand that if you start to get into this field, there is not the one and dominant regulator that sets the standards, like, for example, the ISB in Europe or around the globe and the FASB in the US. So quite to the opposite. Historically, you have a lot of, you have several private organizations and also organizations by international institutions like the UN that actually try to develop and set standards. So the Global Reporting Initiative, the GRI, is maybe one of the leading standard setters in that field that develop standards on how to provide non-financial reporting information. And then there is UN Global Compact that also has a set of standard integrated reporting, try to set a set of standards that combine financial reporting with non-financial reporting. And then there's the Climate Disclosure Standards Board that is more related to ecological reporting. And then there is the SASB, the US Sustainability Accounting Standard Setter. All of these, luckily, I have to say, all of these institutions actually try to coordinate a little bit. But there is, of course, like always with these institutions, also a little bit of competition and fight between these institutions, because in the end, they compete for, let's say, firms that actually will adopt their standards, and this would provide them with some legitimacy and also power in the process. So this is why I think this is not just a coordination thing among firms or institutions that try to do the best for sustainability accounting. It is also a little bit of a political power game. So then, two additional things that I would like to mention. First of all, there are also a bunch of NGOs that play in this setup and that focus on additional information or certain additional points, and I think one that is really very influential is the Climate Disclosure Project, CDP, which is trying to coordinate and standardize CO2 greenhouse gas emission type disclosures, and has made quite a bit of progress doing so, and it maintains a relatively large database of these disclosures where not only firms are included but also governmental entities and jurisdictions. So this is it has become a very important player. And there are also these networks, like, for example, the accountability framework, where the idea is of all these players to come together and to coordinate, let's say, a certain reporting infrastructure that should help to standardize also the let's say, the information about these important issues across firms and time. And then there is, for another, if you think another network player, that is Ceres, they try to combine firms and the financial community with the hope to standardize and coordinate the sustainability disclosures widely defined, so that the financial community can actually build on these numbers at large and try to steer their investments accordingly. And then there is a relatively recent development that the International Accounting Standards Board, the ISB, also decided to get into the game, and it's an ongoing project, and the comment phase is still out for an exposure draft, where they basically propose to introduce an International Sustainability Standards Board, so ISSB. So and of course this is, again, a little bit of a power game here. So the idea would be to have an international standard setter in the area of sustainability reporting that allows firms to apply, let's say, a common standardized set of standards. While this is attractive, of course, you can also see that there are already other players acting in this direction. So in the end, it becomes a little bit of a question of how all these different standard setters, if you want, how they will coordinate, and whether this will eventually lead to some level of standardization. So that standardization is important in this field. For us researchers, it's relatively obvious, because only if let's say all these informations, the sustainability information is standardized to a certain degree, it becomes feasible for researchers, and of course also for stakeholders, to compare firms with each other and to make decisions in that regard. So this is why, like it is common for new and evolving let's say fields, it is really crucial here to see that all these different standard standard setters should also at some point should try to, let's say, produce a standardized set of regulations that makes it easy to combine sustainability disclosures across firms and time. Okay, so this is what I wanted to tell you about the institutional framework. It was very brief. I could extend this to talk about the EU regulation and current discussions in the US and so on. But at the same time, I want this video to be a little bit more, let's say, time stable. So I think there's no point in me talking extensively about the current situation. So this being said, in the next video, we're going to talk about the topics and the methods that we can use in non-financial reporting. I think this is a very interesting aspect of this whole setting. So please stay tuned, and see you around. Cheers, bye.